we are not isolated from the rest of the world. I've been saying it's going to be very confusing, very confusing. And this is just one indication, the worst mistake they had made in their lives. Prices started going crazy. We had the oil embargo, quadrupling of oil prices. Most economic indicators were in nominal terms. They didn't break out real from price or real from inflation.
Cathie Wood, a visionary investor and founder of ARK Invest. In this video, Cathie will share her views on the debt crisis in China's property sector, the inflation and growth dynamics, and the revenue growth challenges. She will address some of the key questions and challenges that many investors face, such as, how does she distinguish between nominal and real growth, emphasizing its importance? How does she anticipate negative revenue growth, and what factors could cause it? How does she adjust her portfolio strategy, identifying opportunities and threats? How does China's property debt crisis impact the global economy, posing risks for multinationals and emerging markets? Let's hear the answers to these questions from Cathie Wood.
Perhaps the debt load associated with 20 years of buy-the-dip property transactions in China reached an untenable point. Many statistics out of China are negative. And Europe, by some measures, is in recession. So maybe these multinationals are suffering more because of what's going on in the rest of the world. But I do think we are not isolated from the rest of the world. So again, lots of confusion. And anyone who's been listening to In the Know for a while knows that I've been saying it's going to be very confusing, very confusing. And this is just one indication.
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Zella. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Zella. China's property sector, which accounts for about 25% of the country's GDP, has been facing a liquidity crunch and a wave of defaults by developers. The most prominent case is Evergrande, the world's most indebted property developer, which owes more than $300 billion to creditors, suppliers, and homebuyers. The crisis has raised fears of a contagion effect on the financial system and the broader economy, both in China and abroad. The Chinese government has been trying to contain the crisis by imposing stricter regulations on the property sector, such as the 3 red lines policy that limits the leverage ratios of developers. The government has also been injecting liquidity in the banking system and providing support to some local governments and state-owned enterprises. However, the government has also signaled that it will not bail out the troubled developers and that it expects them to resolve their own problems.
When I first started in the business, in the late 70s, I was in college, I heard portfolio managers back then talking about the worst mistake they had made in their lives, their professional lives. In the early 70s, after we went off the gold exchange standard and all hell broke loose, prices started going crazy. We had the oil embargo, quadrupling of oil prices. Most economic indicators were in nominal terms. They didn't break out real from price or real from inflation. And because of that, they looked at earnings exploding, and they could not understand why the market was going down, and they kept buying the dip, buying the dip. It was a big mistake because what was happening back then was inflation was the only reason earnings were going up, and the market doesn't pay for earnings caused by inflation. And so that's when we started separating inflation from real growth, and we've been there ever since.
Nominal GDP is the market value of the final production of goods and services within a country in a given period using that year's prices. Real GDP is nominal GDP adjusted for changes in the price level, using prices from a base year. Real GDP is a more accurate measure of the actual output and growth of an economy, as it removes the effect of inflation or deflation. Inflation is the general increase in the prices of goods and services over time, which reduces the purchasing power of money. Inflation can be caused by various factors, such as excess demand, supply shocks, money supply growth, or expectations. Inflation can have positive or negative effects on the economy, depending on its level, duration, and causes. Some of the effects include redistribution of income and wealth, changes in relative prices, and impacts on saving and investment. Tell us in the comments what you think is the cause of current inflation.
Today, we might be on the opposite side of that problem. Now, most portfolio managers, as they're gauging the health of the economy, they look at real GDP. And inflation is just a separate metric that they know the market doesn't pay for. So, well, that's okay until you run into negative money growth negative revenue growth caused by falling prices, companies losing pricing power, and unit volumes not being that strong.
Deflation is the general decrease in the prices of goods and services over time, which increases the purchasing power of money. Deflation can be caused by various factors, such as insufficient demand, technological progress, productivity growth, or monetary contraction. Deflation can have positive or negative effects on the economy, depending on its level, duration, and causes. Some of the effects include redistribution of income and wealth, changes in relative prices, and impacts on saving and investment. Pricing power is the ability of a company to raise or maintain the prices of its products or services without losing customers or market share. Pricing power depends on various factors, such as the elasticity of demand, the degree of competition, the quality and differentiation of the products or services, and the brand loyalty and reputation of the company. Pricing power can affect the profitability and growth of a company, as well as its valuation and stock performance. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you liked the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.